You guys ready to get started? Fantastic. A little change of plans. Doug and I are going to do a little tag team in terms of moderating our session today. Before we get started, we're going to do a quick introduction of our panelists. I'll start. My name is Bill Zielke. I'm the Chief Marketing Officer at BitPay. And if you're not familiar with BitPay, we're one of the oldest and largest cryptocurrency payment processors in the country. So for businesses that want to accept crypto, in particular Bitcoin, we enable them to be able to accept it, and then we settle to them the next business day via ACH. We have about 10,000 merchants on our platform, and as I mentioned, we've been around for about 10 years. So pleased to be here, and I appreciate you guys making time. We'll go down the line here and let everyone introduce themselves.
Hey, Ben Murphy. I lead strategy and transformation for a company called KUBRA. We are the market share leader in billing and payments for utilities. So think about physical statements, digital statements, and then payment processing. So when you go and pay your energy bill, water bill online, we own over half the market. So a lot of the big utilities, the Dukes and Dominions out there. And you know, we today accept all sorts of form of payments. We're working on integrating a crypto as we speak.
I'm Doug Morton, and I'm a computer consultant by trade and CEO of BTCRetailX, which is a point-of-sale system, full-featured for retail, quick-serve restaurants, and built it to integrate with Bitcoin Lightning, but also work in traditional retail with credit cards. And started about 2 years ago, knowing that I could get this taken care of for the need in specifically for El Salvador. But bringing it here because this is where my market is.
Brooks McAdams, founder, CEO of CoinGenie. We're a Bitcoin ATM company. I guess that's our bread and butter. We also dabble in software with point-of-sale systems and selling crypto. Right now we have a little over 100 locations. We're in 12 different states, based out of Charlotte, North Carolina. Thanks.
We're going to start off our panel on a question that I hear quite frequently, mainly from businesses. But before we do that, how many businesses are in the office or in the room? All right, so several. How about consulting firms, vendors that are supporting businesses? So a few of those as well. I'm often asked, will consumers spend Bitcoin or any cryptocurrency? Businesses want to know, and then they follow on want to know why, right? So I'd like to explore this a little bit with our panelists. Is first of all, what's the application? What problem are we solving? Brooks, we'll start with you in terms of your services, your ATMs. Why would a business need to or want to have those types of services involved?
Yeah, so I think a big portion of our customer base are people who don't fully understand Bitcoin. So, you know, I don't know with any exchange if you can call a 1-800 number and someone will pick up and walk you through how a Bitcoin transaction works. That's kind of a big part of our service. Cash to crypto is obviously big as well. There's some anonymity, you know, under $900 transactions. I mean, we still do an OFAC scan and have our compliance side. But, you know, I think a big thing for us is there's a remittance side. You know, there was a guy yesterday called his grandparents sending money to his daughter in college via a machine. It was the quickest way to get her cash to get home, I guess. So we deal with that. And then also just, you know, we get texts all the time, you know, from new customers like, hey, what's a wallet? Hey, how does this work? You know, what's Bitcoin? What's crypto? What's Bitcoins, or, you know, whatever they call it. But yeah, I would say it's either the remittance side. Yeah, we've heard everything. We've had some guy buy a truck through one of our machines via Bitcoin. So it's a new way of you know, purchasing items or just investing.
Doug, any perspective from the point of sale side?
Well, you know, in the U.S., there are certain markets around Miami, Austin, Charlotte has a pretty good footprint of Bitcoin Lightning being used. And it ends up being the foundation of education and getting Bitcoin out there, like Brooks referenced, is key. Because the U.S. market is, I don't know the current statistics, but it's low use for retail, except for, from what I've seen, niches. And I'm sure Bill can answer it because he does the payments side a little bit better than that. But I'm focusing on basically establishing a footprint with the retail point of sale, educating my customers who are traditional retail, you know, taking credit cards, eBay, or I'm sorry, PayPal, Venmo, Cash App, that kind of thing, and try and educate them to take Bitcoin and Lightning, mainly because of its great, its concepts of instant settlement on the Lightning Network. And so it's all grassroots that I'm seeing right now in the States. Outside of the U.S. is a totally different ballgame. And I'm talking more about El Salvador specifically, but I'm seeing in Europe also that people understand Bitcoin and its usage through retail and through remittances much more because their volatility and their government policies that can censor or confiscate their money, they're learning quicker outside the U.S. because we have the stable dollar here. So from my point of view in the U.S., we've got a long way to go, but we do have a lot of grassroots stuff that's pushing retail out there.
Cool. I might just build on a couple of your comments there, Doug, and maybe put some data around customers that are actually spending Bitcoin. BitPay processes about $1 billion in cryptocurrency payments, the largest of which are Bitcoin payments for about 10,000 organizations, some as large as Microsoft and AT&T, some small mom and pops that are predominantly either operating a website or a physical point of sale like Doug is mentioning. And so that's across every vertical category. You might be surprised, even with Bitcoin's price declining and other cryptocurrency prices declining, our transaction volumes are going up, indicating more and more consumers are using it as a form of payment, which again, comes back to that question, will people spend it? They are. 32% of our volume in the fourth quarter was on luxury goods, homes, cars, watches, boats. And while there's probably a small faction of the world's holders of Bitcoin that have enjoyed wealth associated with the price increase that happened in the fourth quarter, that probably unlocked a lot of that spending pattern is continuing. And I think it's largely because of the benefits that the holder sees, but there's also benefits to merchants. And this is why I think a lot of merchants knock on our doors. Cryptocurrency payments are lower cost. Most people don't realize that a crypto payment is a push payment. It's irreversible. And so the merchant or the business not on the hook for the chargeback if there is a chargeback. Once the funds are transferred, it's irreversible. That's a huge benefit to the merchants. I'm an old payment guy. I've been in payments for 20 years. Companies like PayPal, Bill Me Later, and others. Cryptocurrency and blockchain payments turn that value prop around and give power to the merchant in addition to the holder. And so I think that's a reason for a lot of businesses to think about it. There's one more, which is a lot of these communities, whether it's the Bitcoin community or the Ethereum community, they're all different, and a lot of them are very distinct. By offering cryptocurrency payments as a business, you get access to those communities. And a lot of them are worth a lot of money, hundreds and hundreds of millions of dollars, even at today's prices. So just share that with you. Let's move on. I often we're asked, what's it take to integrate a cryptocurrency payment option if you're a business or if you're contemplating it? Brooks, I'm sure from an ATM perspective, there's considerations there, but how does a business get involved? What do they have to do?
We have a link on our website. We normally actively pursue locations. We have some criteria that goes into place, but if it's a safe part of town and a clean store with good hours, some proximity to highway, we're normally pretty interested in putting a machine there. Population of city sort of plays a role, but we've put machines in towns with maybe 1,000, 2,000 people, and the machines have just absolutely rocked. So, I think a lot of it just depends on the comfort level for the customer is what we keep in mind. If you're going to walk into a store with $5,000 of cash, are you going to be okay inserting it into a machine or pulling cash out of a machine? For our point of sale product that we have, it's basically just an API that would link up to whatever sort of point of sale the retailer may have. So the lift on the retailer side is probably about 2 to 4 weeks of development, but from a store perspective, it's how saturated the market is and really how safe of the store is.
Doug?
One of the interesting things that I've been noticing as I developed this point of sale is that I can get my price point of our product substantially less than, say, the 800-pound gorilla of Intuit. So they have their point of sale. They sell it for like $1,700 just for the software. You add another $2,000 for the hardware components. I can undercut that by 80%, mainly because I'm a small business that can pivot instantly and do implementations that customers actually want, not what a boardroom or consulting group says that they need. And so how I treat that is that I'm able to basically design my point of sale to any market I can throw it on Google Play Store as an app. I can throw it on a web server. I can throw it on an iPad. I can sell it to El Salvador, which has a substantially lower economic footprint market, pocketbook for that matter. Where here I can sell it with more services at a higher price point and provide what everybody wants at each step. The other thing that we can do is, on the remittance side, is integrate with, by selling Bitcoin out of our point of sale. And what Brooks had mentioned about the non-KYC under $900, we can sell $100, $50 at the cash register, give a voucher out, and they can either scan it right there or email it to whoever they're going to send it to on the other side of the world. So, I can throw anything into this point of sale and do it really quick. So
Interesting. Ben, I'd like to bring you into the conversation. As Ben mentioned, he's with a firm called KUBRA, who processes really payments for utilities, government municipalities, as well as insurance companies, one of the largest platforms in North America. Ben, as you guys think about accepting cryptocurrency on your platform, what kind of considerations, what's the business case for why you'd want to do this and how to go about it?
Yeah, so I mean, there's a lot of things that we've considered when we're building on a business case. We got to think about what the biller proposition is. I mean, you hit on a lot of those things. When you're operating with utilities, there's a lot of dynamics in terms of they need to go to state commissions to get approvals to add certain products. The big driver right now for utilities is that for one-time payments today, they're charging convenience fees for the consumers, right? They're trying to get away from that to improve the consumer experience, but if the consumer is not going to pay the processing fee, then that falls on the utility, and they have to go back to the state commission and ask to absorb processing costs, because that is going to end up leading to rate increases. So anyways, that built into our business case around lower processing options through cryptocurrency, much lower than the card network fees that they're paying today. So there's that biller proposition. The billers, they want to meet consumers where they are. They want choice of payment. So, Apple Pay, PayPal, crypto payments, right, in the same kind of like checkout flow. And then for consumers, again, those that are holding cryptocurrencies, and we've seen a lot of data coming out of BitPay showing that increasingly younger generations have crypto, right? They want to do more with it, but they don't want to have to transfer it around into their checking account to then go make a payment when they can just pay it directly from their crypto wallet. So there's a lot of drivers, a lot of interest, and a lot of it at the end of the day gets back to making that business case to our clients or utilities that maybe are new to crypto, and and that's where it really gets into the all the AML regulatory KYC components that you guys bring to the table, because I came from the banking world where banks are very risk averse, utilities same thing, right? So that they'll dip their toe in the water, but they want to understand that there's a regulatory framework in place. And also it's kind of a beachhead, I see it as, for other digital token-based services, digital identity, stable coins, right? So this kind of provides a way for them to get more acclimated, familiar with cryptocurrencies, and they can kind of broaden that footprint.
Excellent. I'll just maybe add one additional thought and build on what Ben just shared there in terms of the tenets of the value prop and how you build your business case. Most folks don't realize that on top of the cost savings that Ben talked about and the efficiencies that you gain, you're attracting a new customer segment. And I think particularly if you're an e-commerce merchant looking for growth, looking for new customers, or you're trying to build traffic into your store, you don't think about a new customer base. This is exploding right now in Miami as one example, where a lot of those brands, because there's so many folks that are holding crypto in that local area, the businesses are clamoring now to accept it so they can attract those new customers into their store. Because customers have choice, and so they want to be able to have a business that accepts it, and that brings in foot traffic. There's a secondary benefit too, in that a lot of those customers that are holding crypto are bigger spenders. Some of the research that we've done with Forrester Research with some of our merchants say that they spend on average 2x what they would spend on credit card. Now we're talking about higher ticket purchases here, probably not as true at the lower ticket amounts that are more Lightning enabled types of payments, but 2x AOV increase on top of a new customer is a good customer. and so businesses are benefiting from that as well. We've got about 5 or 6 minutes left here. Let's open it up to the audience. What questions you guys have for our panelists? Happy to field some of your questions. I think your hand went up first.
So I'm curious, both from the ATM side and the payment side, the anonymity and the tax implications. One of my hesitations in terms of selling my crypto or spending it is always, okay, how long ago did I buy this? What are my tax implications? How are you guys sort of addressing that or just managing that from a payments standpoint?
Brooks, jump in there first.
Yeah, so for every customer that uses our machine, they get an automated receipt, every time their purchase is complete. Self-reporting is going to be done on your end, but we speak to the IRS a lot. We had a Title 31 exam last year, so they are kind of digging into companies like ours. We had a 40-hour interview with them. It was quite a daunting task, but we passed. With everything in regards to reporting, yeah, we tell the customer as part of the terms and conditions, it's all self-reporting. But the government is checking. We're required. We're just like a bank as well. We file SARs. James is our chief compliance officer. CTRs on big purchases. So we're very heavy regulated. With the under 900 limits for more of the anonymity, we still have to tie a phone number to your profile. And like I said, it's run through a database just to make sure you're good to make your purchase even beforehand.
I'll just build on that by saying we follow almost identical types of policies and procedures. Any transaction north of $3,000, according to FinCEN's travel rule, we're required to KYC the customer, so that does give us some information that's required, at least under U.S. law. It's different in different countries, and we have to support those as well. So a global standard at some point would be amazing, so that we could reduce that infrastructure and burden. That's part of it. It largely goes back to your self-reporting when you're making a transaction, whether it's a large one or a small one. We make that easy for you by giving you a digital register. You can extract it with a CSV, upload it into some of the tax reporting softwares, a lot of which now are becoming cheaper and cheaper, which gives you a lot of advantage to be able to do your own reporting, keep track of your cost basis. Other questions?
So besides Bitcoin, what are the other currencies that are crypto that are being used as currency?
Yeah, great question. His question was, if you didn't hear it, what other coins besides Bitcoin are really being utilized? Ethereum, Bitcoin and Ethereum are by default, at least for us as a payment processor, 60+% of our volume. We're seeing a huge surge in USDC, the dollar-backed stable coin, particularly for cross-border remittances, either between companies or between companies and their customers. They're just using stable coins because they're less volatile than holding Bitcoin. And they're obviously very, very efficient as well. And so USDC and other stable coins, we support 15 different coins on our platform. The whole idea there is we want the business to be able to offer the wide variety of the coins that are really payment ready. And that's what we look for. We add several coins each year. We just finished adding ApeCoin, which is another very large community, particularly with higher end, very affluent folks. But that's part of what you need to look for as you think about a processor, is what coins they're going to be able to support, how many they're adding on a regular basis, because as a business, you want choice. You want choice. I don't know, panelists, do you guys have anything you wanted to add?
I would agree with that, because one of the rules of retail is don't let your customer walk out the door with their money. And so you have to allow them to be able to spend whatever it is. And retail in general, the industry has often said that outside of crypto, they're take credit cards, take whatever payment that somebody is providing, and it's fairly easy to implement a coin into the payment rails now. For me, I do a lot of self-hosting on Start9's privacy servers and use BTC Pay server, and there's backends on that, and we can hook to pretty much any coin. So sky's the limit. It just depends on somebody wanting to ask for it.
Back left corner there.
I'm show my ignorance here, but if I take $10,000 worth of Bitcoin for a fee, and Bitcoin goes down by 20%, how does that play into your regular, on the street market vendor that wants to accept it?
Yeah. There's a couple of, for those of you that didn't hear the question, is as it relates to if he accepts $10,000 for payment for a goods or service, and he takes that Bitcoin in and is exposed to market volatility, the price increases or decreases, how does he deal with that? We hear this question all the time. Our model might be different than perhaps some of the other panelists here, but we shield the merchant from that market volatility. Think of it as The consumer who wants to spend that $10,000 in Bitcoin essentially transfers their Bitcoin into a wallet that we maintain. And so we're shielding the merchant from that market volatility. And we'll settle to that merchant the next business day in whatever fiat they choose. Could be ACH for US dollars, it could be SEPA for the euro, et cetera. We support 9 different cryptocurrencies from a settlement, 9 different currencies from a settlement perspective. But the whole goal there is to have the merchant not have that exposure. And out of the 10,000 plus merchants on our platform, 95, 96% of them are all settling in fiat, not crypto. And that's because they want that protection. That gets them out of having to do the accounting, exposure to the market volatility and the FX associated with it, also the complexities of some of the wallets. Over time, as merchants get more sophisticated, they'll take on their own wallet and start settling in some crypto. But that's just part of the process. Doug, did you want to add anything to that quickly?
No, that was
Terrific. I think we're all going to wrap up, and that's all for time. I'm sorry.
Can I ask one question?
Sure, fire away.
Right, I have 2 questions, but I'll ask one. Generally speaking, for e-commerce transactions, what % of e-com retailers have added some kind of a Bitcoin to their checkout?
Yeah, it's a great question. It's tough to quantify, but here's one way I'll do it. Out of the top 100 e-commerce retailers or e-tailers in the United States, 11 are now accepting cryptocurrency. So that's top 100. So it's still early, but it's still meaningful.
And a follow-up, if I can. Have you heard, do you have any anecdotal information as adding a Bitcoin helped their sales? Have they increased sales as a result of that?
Yeah, so just considering that same base of merchant that I spoke of that are accepting cryptos, and these are major brands, whether it's Microsoft, AT&T, Newegg.com, Jomashop.com, Shop.com, these are all top 100 e-commerce merchants. On average, 1 to 3% of their sales are from cryptocurrency.
Right, but is it growing their business?
Well, 1 to 3% is already, if you consider that most of those customers are incremental, absolutely. Yeah.
And
You had one more question. I think we got time to sneak in here.
Yeah, with BitPay, do you have like priority over larger transactions or smaller transactions? Is a smaller transaction more of a hassle for you guys? Or?
Yeah, good question. He's really talking about the ticket size of a transaction and how we really post that to the blockchain. Are we able to prioritize our sequence? We support Lightning, so for the small dollar payments that are going via Bitcoin, we can process that through the Lightning network. Just gives us efficiency and scales, helps us prioritize. But generally speaking, given where volumes are today, we've seen 0 capacity issues in processing. And as I mentioned, we do about $1 billion in volume. That's about 100 to 125,000 transactions per month, and about $1 billion on an annualized basis. So, cool. You guys have been great. Appreciate it. Thanks to my colleagues here in terms of their commentary, and you guys have a great day.